If you've recently opened your mail, you may have seen a Form 1099-DA. You might be wondering what that is, and more importantly, what you're supposed to do with it. This is a new form for a lot of people, and it's creating confusion because it looks more complete than it actually is. So let's slow down and walk through what it means, why you received it, and where people get into trouble. It's important to understand why this form is starting to show up. US-based platforms such as like Coinbase are now required to issue Form 1099-DA. These forms are generally sent out by the end of January, and most taxpayers see them by mid-February. The goal here isn't to calculate your tax bill, it's to report activity. For years, crypto lived in a reporting gray area. That's changed. The IRS now receives this information directly, the same way they do with brokerage accounts. So if you received one, that doesn't mean you did anything wrong. It just means reporting caught up. Let's talk about what the 1099-DA is and what it isn't. This is where expectations matter. Most people assume this form shows profit. In many cases, it doesn't. What it usually shows is gross activity, sales, exchanges, movement of crypto. The key phrase to focus on is movement of crypto. It's not designed to tell the full tax story, and it doesn't reliably include cost basis. And without cost basis, profit can't be calculated correctly. That's not a flaw, it's just not the form's job. Let's now discuss why profit often looks too high. Crypto behaves differently than traditional investments. When crypto moves from one platform to another, the cost basis often doesn't move with it. The 1099-DA doesn't rebuild that history. So what you end up with is a form that reports sales, but not what you paid for the asset. When that happens, profit looks inflated, not because anything improper happened, not because the taxpayer made a mistake, but because the data trail broke along the way. Software may not be the right solution in this scenario. A lot of people import this form into software like TurboTax and assume it will sort everything out. It won't. Software can only work with the data it's given. It doesn't know where your crypto came from or what it originally cost unless someone tells it. If cost basis is missing, the sale still gets reported. That's how income gets overstated, quietly and automatically. I've seen people try to fix this with massive spreadsheets, hundreds of columns, multiple exports, and even then the numbers were still off, not because they weren't careful, because crypto data fragments as it moves. Let's talk about why all of this matters. When your return doesn't align with what the IRS received, it gets flagged. When profit is overstated, you pay tax you didn't actually owe. That can mean penalties, interest, and unnecessary back and forth after the return is already filed. Nothing explodes. Nothing looks obviously broken. But the result is distorted. There's also the timing mistake that makes this worse. This isn't something to look at in April. The forms arrive in February for a reason. Crypto-related forms and reporting take time to review. It takes reconciliation. When people wait until the last minute, they lock themselves into bad numbers. The people who handle this well slow the process down. They review early so the return reflects reality, not just reported movement. I want to take a moment to discuss what done right looks like. Filing crypto correctly doesn't mean reporting less. It means reporting accurately. Transfers don't create profit, although missing cost basis does. The intent behind this reporting change is transparency, not overpayment. But transparency still requires interpretation. And that's where planning and review matter. If your crypto activity involved multiple platforms, transfers, or assets held over several years, this isn't a simple import and file situation. It's an analysis. And the earlier it's addressed, the more control you have over the outcome. This is one of those changes that looks minor on paper, but deserves attention before filing, not after. It's important for a tax professional to take a look at this and reconcile your forms for you. Click the link in the description to request a crypto-related tax strategy call. We use a short questionnaire to make sure this is a good fit for both sides. Please like this video and share this to someone who can take away some key points from this video.